Hello, everybody. Happy Thursday. Thank you all for joining. Today, we're going to talk about stuff that people are probably sick of. We're going to talk about PCE and inflation and Jackson Hole and Jerome Powell and the Fed. And why do we care? Because until we take this lid off the great clouds, get rid of them all, we won't be able to go to the moon, as they say. Rocket boost to the moon. This is why we care. Now, tomorrow, the market's going to move. The question is which way. I'm going to share all of my data points as to where I think we are going to go. And maybe we already know. So let's go. First of all, this is not financial advice. I could be wrong. Maybe the PCE number will suck tomorrow. Maybe Jerome Powell will say we're going to raise rates to 10%. We'll see. But first of all, these are the guys. And I've actually been to Jackson Hole for a conference as well, way back in, I think it was the 90s. Beautiful place. It looks like a picture postcard, but that is actually a real view from where they're standing. That's Jerome Powell on the left. Enough of that. Anyway, just thought I'd share that beautiful photograph. And tomorrow is Big Numbers Day at 8:30 a.m., which is 5:30 in the morning my time. PCE data comes out. And depending on exactly what that says, that will have a huge impact on the markets. And also, Jerome Powell speaks at 10 a.m., which is 7 o'clock Pacific. And what he says is very important. Last time he spoke, maybe some people believe overly dovish, but he was sending a very clear signal. Now remember, if the PCE number is kind, markets will rally. And JP, I do not think he will rock the boat down there in Jackson Hole. That is what I think is going on. Now, any indication that an economic slowdown might alter the Fed strategy, which I think they're going to look at a whole bunch of data points, they're going to see that the economy has slowed down. So why is the core PCE important? First of all, it's inflation, less food and energy. And the Fed likes to look at this. Some people don't care, but this is what they look at, therefore we care. And it determines the temperature going forward. Now, what is the PCE made up of? The key elements, there's one that's very important, and that is housing. You can see here, you can see food and beverages is about 13.9%. Housing is 22.6%. Medical care, 22.3%, another big chunk. Transportation, 9.8%. Recreation, 8.2%. And other goods and services. But the key factors here are housing. And the question is, what will owner's equivalent rent do? Because we know the housing market itself has come down a lot. So that is a good thing that the housing is such a big chunk. But again, we'll see. Now, the expectation tomorrow, as you can see, is about 4.7%. Any number 4.7% or lower, the market will rally. And that's what we're looking for as we go forward. A lot of people aren't sure exactly where this is going to go, but I'm confident it'll be 4.7 or below. If it's 4.8, we're in trouble, I hate to say. So this is the actual list of history. You can see last month it was 4.8%. The forecast is for 4.7 this year. Now, sometimes they are right, sometimes they are wrong. I wouldn't have actually picked these color codes when I was coding it, because typically green is a good sign, but green means it's above expectation, above forecast, which is not good. But you can see July they missed, so green is bad. June they got it, red is good. It was under expectation, etc., etc. So if you count up the greens and the reds, it's pretty evenly matched. So it could be a coin toss, but I think it's looking good for a number of reasons. Now, everybody's also talking about indications from what Jerome Powell says tomorrow morning will give us a good indication of what's going to happen here. And I think these numbers are actually wrong. So here right now we have a 64.5% chance of a 75 basis point hike. And I think that's too high. I think it should be the other way around. It should be a 66% chance of a 50 basis point hike. And this is from the CME FedWatch tool. I think they are being overly conservative. And I think the words tomorrow, if the words come out of Jerome Powell's mouth like last month are similar and dovish, I believe this will flip. Now, my expectation, here it is again, sharing it for the umpteenth time. I believe they will do 50 basis points on September 21st, 25 basis points on November 2nd, and 25 basis points on December 14th, if they even get that far. And then they will reverse course first thing in the year, if not earlier, depending on how much GDP shrinks, because the more they increase this, the more the GDP comes down. Simple mathematics. I'm the only person that talks about this. We will see. We'll know by Christmas if I'm full of crap or right. So I am fascinated. Either way, it'll be fun. Now, this also is what I would do It's what I look at. It doesn't mean they're not going to break things. And that's called a hard landing or a crash landing. So it's fully possible that the Fed won't listen to this model and they will crash land the economy. But I think they're cleverer than that. So let's talk about another thing that is very important to look at. And nobody knows exactly what's going to go on. So this graphic here, it looks a bit crude. But on the left, you have QT, which is quantitative tightening, the squeezing of the money. And in the middle, you've got the increasing interest rates. And we've never before had a situation where there's been quantitative tightening of this level combined with increasing interest rates. So this could really, really blow things up. Remember, QT is another term for it, is balance sheet reduction. And it's about to ramp up to full scale. They were reducing by a certain amount, but that's about to double in September, which we have never seen how this will play out. So it will also be very interesting to watch. It's like nobody cared about macroeconomics 10, 20, 30 years ago. Now it's the most fascinating subject on Earth because we're seeing this weird situation play out all over the world with central banks, with money printing. It's a huge macroeconomic experiment. And I believe ultimately it could result in a big, great reset because it's not sustainable. Anyhow, let's talk about the bond market real quick. You can see here many people believe the bond market is the system of truth, source of truth, and the bond market shows the way as to where we are. Right now, the 10-year is at about 3%. It took a little bit of a run. It's coming back down again. It's just above that green, the red line, which is the 50-day moving average, and the green is the 200-day moving average. And we had the June 15th high, which was about 3.6%, if I recall correctly. Now, let's talk about what happened. The stock market today went up a big run, 2%, a little more. And you can see here, I had my impulse wave out to year end. We had the all-time high back in January of about 4,800. We had the bottom on the 18th of June, which is about 3,600. Right now, we're bang in the middle again. We're about 13%, 14% from the all-time high. And you can see there was a big move up in the S&P 500 today. Now, looking at the two lines as well, coincidentally, not only are we between the bottom and the top, the June 18th bottom and the all-time high, but we're also kind of between the 200-day moving average, which is the green line, and the 50-day moving average, which is the red. And last time we got rejected off the 200-day. So we'll see if we can break through it this time. And I know that a lot of people out there are calling for, we're going to go back to a 3,200 S&P 500. And there's many people as well that say the stock market will never, ever reach an all-time high for the next 5 to 10 years. I do not subscribe to that theory at all. Stock markets go up. It's just how it is. And that's the way it's been for the last 90 years. Anyway, let's look at commodities. Here you can see peak inflation is behind us. When you look at definitely from a commodities perspective, everything is tanking down to earth. Oil, natural gas, well, it depends on which country you're in, of course. Soybeans, wheat, corn, copper, cotton, lumber. And these are all some components will actually go into the PCE as well tomorrow, which gives me confidence that it'll be 4.7 5.7 or below, getting all my numbers mixed up. Now, oil, another one, which is not part of the PCE, but you can see here very critically, and it happened very subtly, because we have to look at oil to get a feel for where inflation is going. It did get rejected off that 200-day moving average, again, the green line here, and you can see the death cross is coming. That is when the red line crosses the green line, and that bodes very bad from a TA perspective for the price of oil, i.e., it's a very bearish sign. So we'll watch this carefully, and we are going into the colder months, and there'll be less actual demand for oil, less driving, stuff like that. So let's talk about the stock market. And some people believe, well, did some information get out? But look at that for a green day. Everything is pretty much green. You see Tesla there down about 0.34%. Remember, they came off a 3-for-1 stock split, and this is their post-split duck, and it's tiny so far. Last time Tesla came through a split like this, it fell about 30%, and then it went and did a 5x, but that's 2 years ago. This year, we'll see what happens, but it looks like it is holding up pretty strong. And so are all the other big names. In fact, if you look at all the names, the dark green names, Microsoft's, Apple's, Google's, Amazon's, etc., they are all doing very well, as well as some of the retailers like Walmart and some of the drug companies are all kind of dark green. So the question is, was there a PCE leak? We'll see. But the very clear signal is if you want to outgrow debasement of fiat, buy disruption. That's why I am obsessed with disruption. Things like Tesla, things like Bitcoin, etc. That's where you need to be for the future. Now let's look at the crypto market. It did not follow the equities market, and you can see Bitcoin is kind of down over the last 24 hours. ETH up above 1700 again. BNB is up, XRP, Cardano, and the rest of the market is kind of sucky. So it hasn't really performed. But there's a silver lining to that, because I do believe these will become uncorrelated soon. And what happens is sometimes some assets run and others lag behind and follow. And once these assets that have run too far, the bees will float to a different asset to get more alpha. That's what I believe will happen with crypto. And I believe Bitcoin will have a good run up to the end of the year. And I did say we had to get through this winter that happened during the summer. And September was the month in which I believed, and I said this, 60, 70 days ago, that it would be a great September. And I still do believe that, despite the fact September is historically bad. But we have to get through that next Fed meeting. That is key. And again, that's the cloud, that's the lid on everything right now. So let's look at Bitcoin. The chart here, I did talk about this a few times. It was a beautiful range rider picture, perfect off the bottom. But now we have that double bottom at around that 20,700 level. And since then, it's creeping up again. And I'm hoping this becomes another nice tradable range rider as we go forward. Note, we are still under the 50-day moving average, and we are still under the 200-week moving average. Anytime under the 200-week moving average historically for Bitcoin has been a great time to stack sats. So I did a little sneaky tweet earlier, and the question is, well, the S&P 500 was super strong ahead of the PCE release, which tells me maybe markets got wind of this. I was also looking at a lot of options action. There was a huge amount of call option bets on things like Nvidia, Amazon, Tesla, Apple, very, very active. So the big money knows something is up. And maybe there was a leak of the PCE data that means it's going to be good tomorrow. And maybe the market expects a dovish Jerome Powell. So we'll see. Now, if both of these two things happen, we're going to have a great day tomorrow. If one of them happens, we'll probably still have a good day. So we'll see. I don't expect, as I said before, that Jerome Powell will do anything too drastic at this meeting. He'll do his usual kind of soft talk and keep the markets calm and telegraph as much as he can. Okay? So with that, there was also some other good news that also could be construed to help the markets. First of all, Germany escaped 0% growth by 0.1%, which is very good. That article is technically slightly off, but the 0.1% is positive, and that means a lot, and markets like that. In addition, China, they're firing up the money printers, and Alibaba, JD, and other Asian stocks jumped hard. I think one of them was up 25% today, as the Chinese government is going to start issuing subsidies, money printing, as we say, QE to infinity. You've heard me say that before. Now, speaking of QT, not QE, but quantitative tightening, this is from MT Newswires. They said the US SEC held outright by the Fed virtually unchanged as of August 24th compared with the previous week. The Fed is supposed to be tightening hard. Their holdings fell only by about 140 million compared to the 8.43 trillion. And that was the same level as the week before. And the securities rose by about 1.5 billion to about 5.7 trillion, slightly more than offset by the 1.56 in mortgage-backed securities. Remember, they hold both types of assets. But you'll see here, the key is they're supposed to be doubling their quantitative tightening, but they haven't been successful in doing the quantitative tightening so far. And since June, the monthly cap has been a total of about 47.5 billion reduction a month. And the Fed has only reduced its portfolio by about 20 billion. So they're not there yet. Can they double it to 90 billion? I don't know. In fact, we'll see. But the overall Fed balance sheet isn't that different to when they started tightening monetary policy back in March. That 8.9 trillion, I think it was, or 8.885. And they're not far off it. So QT is hard. And this is why we believe we might have this situation. QE to infinity and beyond. So I think it's some movie, but I thought it was a very cool term. I've used it a number of times. And we'll probably see it a lot more. But basically, with the cancellation of student debt, which many people don't agree with, and there's huge backlash against it, I don't think it's setting people up for success in the future. But I don't want to get political about that. But it's going to cost $500 billion if they do the $20,000 forgiveness level across all the student debt. I didn't even realize there's over $2 trillion in student debt right now in the US today, which is a large amount of money. Cancelling the first 20,000 tranche of it would eliminate $500 billion by my crude back in napkin calculations. I could be off by 50 billion or so. And this is on top of the IRA, which is the Inflation Reduction Act, which is the funniest name ever, of another $435 billion, call it $500 billion. Those two combined is $1 trillion. So where's that money going to come from? I don't know. Let's see. So tomorrow, I do believe, in summary, that the Fed will speak dovish again. And I do believe they might raise 50 basis points in September, 25 after that, and maybe another 25, and then that's it. Because once they go above that Fed funds rate of 3.5%, we are in deep trouble. So a lot of people, and I've been saying the same numbers for months now, I believe it. We'll see what happens. Anyways, so much stuff will be very interesting for the next 3 or 4 months going to the end of the year. I remain bullish. And we'll see where we go from here. Again, markets are risky. Investing is a blood sport. Either way, there will be a lot of volatility, but a lot of opportunity as well. So with that, hope you enjoy the KPM, the knowledge per minute, and I'll see you all tomorrow. Tomorrow is DCA day as well for you guys and gals. So thank you all for being here. Happy Thursday. Have a good night. And thank you to the mods in the chat and everybody in this great community. Thank you.